Please note that the analysis presented here is for educational purposes only and should not be construed as investment advice. Trading and investing carry a significant risk of loss, and it is important to conduct your own research and analysis before making any investment decisions. The information presented here is based on past market performance and is not indicative of future results. The decision to invest or trade should be based on a thorough understanding of the risks involved, as well as your personal financial situation and investment goals. We cannot guarantee the accuracy or completeness of the information presented here, and we are not responsible for any losses that may result from your reliance on this analysis. Always seek the advice of a professional financial advisor before making any investment decisions.
Hello, everyone. Today, we will be examining the USDCAD chart on a monthly basis. As we have previously done in our lessons, we have enclosed strong support and resistance points within an orange frame and are plotting our guidelines accordingly. The crucial point here is that our guidelines, as they move from the long-term chart to the short-term chart, provide us with clues about the price direction at turning and breakout points. Although we have enclosed the area we will be examining within a blue circle, we will first conduct a Fibonacci analysis on the chart. This will provide us with additional clues in our analysis and enhance our understanding of the chart. As we have previously done in our lessons, we will conduct both the inverse and standard Fibonacci analyses. In our chart analysis, we begin with the Fibonacci analysis of past price movements. To simplify our analysis and reduce confusion, we divide our chart into two areas called Phase 1 and Phase 2. In Phase 1, we identify the areas we consider as bottoms and corrections. Our interpretation of the chart can sometimes be reversed both vertically, for example, reverse Fibonacci, and horizontally, for example, mirror-like. In such cases, we consider the vertical line that divides the area in our Fibonacci analysis as a mirror. Consequently, we observe that the correction points in both areas occurred at approximately the same price level on the chart, first and second Fibo. Performing our first Fibonacci analysis in the Phase 1 area, we observe that our retracement area is close to the 0.618 level. The key observation here is to determine the rate of correction after the price increase, as it determines the Fibonacci value that our post-bullish chart corresponds to on the pullback. In the Fibonacci analysis that we will conduct in Phase 2, as we have previously mentioned, we consider it as a mirror reflection of the Phase 1 movement from a horizontal reverse perspective. When we perform our standard Fibonacci analysis from this perspective, we observe again that the correction value is close to the 0.618 level. In this case, we have two approximate forecasts to follow for potential uptrends and potential downtrends in the blue circle area that we will analyze, keeping in mind our second guideline. To determine the price levels to watch during these moves, assuming, as we did in our previous analysis, that the corrections will occur at the 0.618 Fibonacci retracement levels.
In our region, when we perform a Fibonacci analysis to check the likelihood of upward movement in a graph, we can see that the dark green arrows shown by our reverse Fibonacci align with the price at 0.786. After testing this price twice, as seen in our graph, the price has remained below our Fibonacci value of 0.618. As we have learned from our previous lessons, for an upward movement, our second guideline line must remain above. In this situation, we look at our Fibonacci analysis for downward movement. The Fibonacci analysis presented here is based on the assumption that the price in our chart did not break above the second guideline. We can see that the price may try to test the 0.618 level again, around 1.11912, in the Fibonacci sequence, which could serve as a potential reversal point. If the price remains below the third guideline, we may need to reanalyze the situation. So far, in all of our lessons, we have mainly focused on long-term analyses. In our upcoming lessons, we will gradually analyze short-term charts in more detail. I will conclude our analysis at this point. When conducting analyses, it is crucial to observe a great deal. By doing so, your observations will positively influence your experience with chart movements. Thank you for watching, and don't forget to subscribe my channel.